Greetings, my dear students. This is Balas again from Balas Accountancy Special Classes. Welcome to my 37th episode. This episode, BSE 037, concludes my special final account sum, totaling 12 numbers, scheduled from BSE 031 onwards, scheduled from BSE 031 onwards. This one is the last one, 12 by 12. I started the final account series from my episode number BSE 029. Those of you who have missed any episode in between, kindly watch the same before joining the current episode. As usual, let me switch over to my sharing section of this video. Thank you. Well, the special question of the day. We have been given a trial balance as on 31/3/2022 of Mezes benchmark. Well, this is the trial balance. I'm pausing it as usual. Kindly write it down. And the remaining part. Okay, a tallied one. Followed by A, B, Z, D, E, F, G. 7 adjustments, A to G. That means 7 number of adjustments. Okay. Kindly ensure that the question is readily available at your end, so that you will be very comfortable as I go on explaining the sum. Allocation part. Let me first show you. Well, the allocation is like this. As usual, blue, violet items, trading account, red one, profit and loss account, and the remaining ones, a black balance sheet. Well, some of the items, they use synonyms, etc. So it's better I explain to you. Anything related to factory, of course, you know, it comes in the trading account only. So next violet item, debit notes and credit notes issued in connection with the goods. It is nothing but retain inward and retain outward. Debit notes are issued when purchased goods are retained. Similarly, credit notes are issued when sold goods are retained. For your convenience, just remember that debit one is retain inward and credit one is retain outward, and we need to suitably adjust it. Okay. Building, why I have shown half each is that in the adjustment they have mentioned that we have to apportion it between trading account and profit and loss account. That's why I have made it like this. When I'll be explaining the adjustment, it will be very clear to you. Watchdogs upkeep costs. Upkeep means maintenance of watchdog. Watchdogs, they are clearly told watchdogs are meant for factories, hence in the trading account. Okay. Then in the balance sheet, building, okay, machinery, original cost hardly matters for you. So we will be concerned if at all they have mentioned about the depreciation. Freehold land to be used for another 5 years, then the owner intends to sell it off for huge profits. Just insinuating it is a fixed assets. That's all. Okay. Bills drawn to guarantee payment. This is nothing but bill receivable and bills payable, they say. Debit side, bill receivable, credit side, bills payable. Okay. So such synonyms you should easily convert into words and the terminology what you know already. Okay. Why this bonus paid to one officer who emigrated to another country as shown for the balance sheet purpose is that you will see as we encounter the question, the bonus is not at all paid, and it is normally paid afterwards only. Hence, they have given it's an adjustment. And whatever bonus we have to pay, of course, we'll consider for the profit and loss account. But they say already you have paid to somebody. Since the bonus is not paid, the entire amount is supposed to be shown as a liability. However, we can adjust to the extent whatever has been paid. That's why I have shown it in the balance sheet. This should be adjusted in the liability side when we will be showing the bonus outstanding expenses payable. That's why I have shown it in the balance sheet part. Okay. Well, let us take up the adjustments one by one. Adjustment item A. Closing stock at the cost price is rupees 8,000 more than the opening stock. But the ruling market price is rupees 35,000 only on 31/3/2022. So what is the actual cost price? 30,000 plus 8,000. Okay, that is 38,000. Why? Because opening stock has been given in the question as 30,000. Okay. So 38,000 is the actual cost, whereas market price is given as 35,000. The rule says cost price or market price, whichever is less to be taken. Hence, we are fixing on 35,000 rupees. So it will be shown in the trading account, closing stock, in the credit side, and the same again will be shown in the balance sheet asset side as current asset. So that adjustment is over. Now the adjustment item B. Salaries are prepaid by rupees 3,500 and a bill for rupees 1,800 for staff facilities enjoy is paid. So the profit and loss account debit side will show the amount given in the trial balance is 38,000. Add outstanding staff facilities 1,800. Less prepaid salaries, and the net amount of 36,300 will show in the outer column of the profit and loss account. And the corresponding effects. In the balance sheet liability side, current liability, outstanding expenses, staff welfare expenses 1,600. Balance sheet asset side, current assets, salaries prepaid 3,500. So that double entry aspect is taken care of in respect of this adjustment. Item number C, adjustment. 2/5 of the building is used for office purposes. The remaining area for production work. Building repairs cost is apportioned accordingly as a direct and indirect expense yearly. So building repairs has been given in the trial balance as 15,000. 2/5 for office purposes. That is indirect expense to be shown in the profit and loss account. That comes 6,000. And direct expense, naturally 3/5, 9,000. So we will be showing in the trading account, debit side, building repairs 9,000, and in the profit and loss account also in the debit side, the balance amount of 6,000. Okay, so that's a proper apportionment. Next item, item D. As per bonus calculations, the total bonus expense for the accounting year 2021-22 is rupees 18,000. You know, the bound expenditure for the year, that is 18,000. It has to be shown as it is in the profit and loss account. We will show in the debit side of profit and loss account bonds to staff. Now, we find just 2,500 rupees has been given. That is why in the trial balance one entry is there. Bonus paid to one officer who migrate to another country is 2,500. Net of that one only will be the liability. Outstanding expenses, bonus to staff will be 15,500. So the item 2,500, any item from the trial balance, we need to show or adjust in one place. That has been done here, where it has been done the outstanding expense side. Okay, right. So double entry 18,000 has been taken care of. The next part of this 18,000 corresponding part has been subjected adjustment with an item taken from the trial balance. Okay, so that is taken care of. You may say here is 18,000, here it is 15,500. Naturally, if you add this 2,500 also, double entry is taken care of. Okay, and next one, item E. A cash sale of goods dispatched rupees 20,000 at rate of 2% cash discount is to be accounted for. Cash sale means to strike you immediately that cash movement is there, that has not been accounted. So in the current asset, cash balance or cash and bank balance, whatever it is given is 50,000. To that, we need to add the net amount received. So Net of cash discount, we have received 19,600 because 2% that is 400. 20,000 minus 400, 19,600 physical cash received. Okay, or money came to bank, whatever it is, that should be added. I am not finalizing it here because one more entry comes. And as for the trading account, the corresponding effect is that sales already given 4,15,000 plus you add the total sales value. Then what about this 400 rupees? That you show in the profit and loss account. Discount allowed. Already discount allowed is 3,200. To that you add this 400 also, so 3,600. Okay, so corresponding effects have been taken care of. Now let us move to item number F. The watchdog's code is used for factory security only by the night watchman. Therefore, their upkeep cost is the sole responsibility of the factory. What they're insinuating it is that we need to take it into trading account. Okay. So trial balance item is not a journal. Okay. This particular amount upkeep of cost has been shown it in the trial balance. Let us see that where it has been. Yes, watchdog upkeep cost 6,600. So trial balance item only. That we are showing in the debit side of trading account. Okay, because for factory purpose, code is used for factory security only. Hence, anything related to factory is to be shown in the trading account. Okay. Item number G. Depreciation details. Revalue the watchdog's code account rupees 28,000. Building at 5% per annum. Trading account debit side, depreciation, watchdog's code. Given figure is 30,100 minus the latest figure. Naturally, the depreciation is 2,100. And building. Why building depreciation is shown in the trading account? Because we have been clearly shown above. Okay, how the building expenditures are being apportioned. Accordingly, we are taking total depreciation come 9,000. 3/5 of that is here we are taking. How we get 9,000? 1,80,000 is the value of the building. 5% depreciation come 9,000. So in the trading account part, we are taken 3/5, and the profit and loss account part, we are taking 2/5. That is 3,600. Okay. So depreciation has been taken here. Depreciation, as far as watchdog is concerned, entirely taken within the trading account, building in 2 places. Now the corresponding effect, how are you going to show it? The balance sheet, building minus total depreciation we have to show. Okay, 5,400 plus 3,600. That is a building total depreciation. Net amount will be showing in the outer column of the balance sheet. Okay. Watchdog score 2,100. 30,100 minus depreciation 28,000 we are showing. Okay, that's all. Next one. There is an item in the trial balance. Interest-free loan 25% repaid on 31/3/2022. Not accounted for. It is shown within the trial balance. Okay, this is an extra adjustment. So 25% of the 1 lakh loan is 25,000. That had been paid. Actually, cash outflow. We had to adjust in the cash and bank balances. As per trial balance, 3,000, and again this 19,600. This much I have already explained to you, and minus 1 outflow. So 44,600 will be the cash and bank balance final amount we will be showing in the balance sheet. And what is the corresponding effect? The loan which we would otherwise shown in the balance sheet as a non-current liability, 1 lakh, get reduced by this 25,000, and 75,000 only we will be showing it. Okay, so that's all. Well, let us now draw the final accounts. First, trading and profit and loss account. Trading section. Open stock, given amount assets, purchase less retains, wages and factory supervisors remuneration, direct expense, Watchdog upkeep costs, direct expense, building repairs to the extent of direct expense, depreciation, all already explained while explaining the adjustment section. Fine. Sales, 4,15,000 plus 20,000, 4,35,000 I already explained. Let's retain. This is the outer column amount. And closing stock, that too has been explained. And if we balance the account, we will get a gross profit of 1,46,900. Let us check whether yes, 1,46,900. Now, profit and loss account. Salaries and staff welfare. This 36,300 I already explained. Commission as it is, building repairs, 6,000 already explained. Bonus to staff already explained. This is the amount given at the adjustment. So that you have taken, I have satisfactorily explained to you the complete elements. Discount allowed. This to explain 3,200 is the trial balance given here, plus 400 in connection with the adjustment. So this is the one. Depreciation building already explained. Commission discount received as it is. That being the case, if we balance this profit and loss account, we will get a net profit that has to be transferred to capital account 92,800, and let us check it. Yes, it's correct. Next one. Balance sheet. Bills payable as it is, creditors as it is, outstanding expenses, staff welfare expenses explained already, bonus to staff already explained, 18,000 minus 2,500, whatever is reflected in the trial balance reduced. I already explained. Interest-free loan explained. General reserve as it is, capital we had opening, we added the net profit and less drawings. This is the latest capital. Cash and bank already explained how the figure got changed and we arrived at 44,600. Bill receivable as it is, debtors as it is, stock in trade already explained. Salaries prepaid, adjustment explained. Freehold land as it is, no depreciation has been told, hence it is shown as it is. Building subject to depreciation, depreciation has been already explained. Machinery, see the original cost rupees 5 lakh, but we have been given 4,75,000 as the value. Now, kindly do not take 5 lakhs minus 4,75,000, that is 25,000 as depreciation. This has been given just as an information. Okay. They are not categorically told us this is the amount of depreciation on machinery and equipment. In the absence of any such information, we will conclude that no depreciation is chargeable this year. Okay. So this is just an incidental information only. 4,75,000 amount has been given in the trial balance and no mentioning whatsoever about depreciation. Hence, we are taking the same amount. Watchdog scored subject depreciation and both sides tallied 9,27,100. Let us check that also. Yes. So that is also tallied. Okay. Well, students, with this episode, I have completed 12 special sums of financial statements as originally promised. Okay. If you practice all the sums, I am quite sure your knowledge about finalizing accounts will substantially get increased. Okay. So practice more and more, again and again. Okay. Well, in my next episode, I'm likely to take up a new chapter. Okay. Till then, goodbye. Take care of yourself. See you soon.